Are we at a triple top? Is this a bearish reversal point? Is it a triple bottom of a variant? And are we bullish? Well, those questions and more, we'll certainly be taking a look at that in the next few minutes in our market preview. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:10 a.m. Central Time, and I'm recording this in preparation for market day, April the 17th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and see just what we are faced with. There was actually quite a bit of action last night, and at one point we had some news come in. Obviously, we took off to the downside. You have the Russell down over 1% as of the time of this cut. The other broad market indices are also down significantly, with the ES down about 0.6, the NASDAQ down about 0.8, and the Dow also down about 0.6. Crude oil is also in a similar place, down about 0.6, with the euro scratch bonds up slightly, about 0.3, and gold up about 0.5%. In terms of the overseas actions, China was up well over 2%, Hong Kong down about 0.3%, Japan down over 1%, Germany down 1.79%, and the United Kingdom down about 0.9%. So quite a bit of weakness coming from Europe into our action. From the macroeconomic reports for today, we do have a number of things on the table. We have the core CPI. We have, during the market day, preliminary University of Michigan consumer sentiment and inflation expectations. So a couple things coming during the trading day you need to be aware of as well. In terms of our current volatility, I suspect that we'll see an increase in that today, but as of yesterday's close, this short-term VIX was down below 11 at a 10.74. Historical IV percentiles, look at this, 14, 2, 19, 24, even the Dow in the lower quartile. Also take a look at this in terms of standard deviation moves, and again this may change today, but we went 2 trading weeks without a single standard deviation move in the S&P 500 and on the Dow. This is quite a change from the period that lasted for several weeks prior to this run, where almost every single day it was a standard deviation move. So what gives? What goes forward? Well, certainly one of the things that we're looking at is what is the situation with our current market trend. Let's get into our daily guide and we'll talk about that a little bit. First of all, I should mention futures. Your crude oil contract will be likely wanting to roll over today. Volume is virtually equal between the old contract and the new contract. Follow through on your signals may be poor today as volume is split between the two contracts, so be careful over there, and that will also play over into stock traders who are perhaps playing those purer energy plays that are stuck to the crude oil price. In terms of this market trend intermediate term phase opinion, we are still phase 3. We're looking for higher highs and higher lows, but as I mentioned at the beginning of the video, we're right at a place where some people might call it a triple top. Some people might also look and say we've had a triple bottom of a variant, the bottom with a slightly higher low on the second point, and again a slightly higher low on the third point. So what is it? Is this a bullish pattern or is this a bearish pattern? Well, certainly we've had news come in overnight, and we'll see how this actually resolves. But Suggestion is that if you look at other indicators, such as momentum, that this is actually looking to be a bullish pattern. So we need to take a look and see for those signs of eventual breakout out of the top side and the establishment of new highs. And certainly it is necessary that we see a higher high come into place for this intermediate term phase opinion to remain as phase 3 and to have this bullish expectation. But this is clearly a complex pattern and is clearly a compression pattern of some sort, and ultimately it will be resolved one way or another. We'll see volatility increase. We'll see a move at some point take place as energy returns to the marketplace once we get some resolution out of this compression pattern. So is the action of the overnight, is this the beginning of something? Are we going to actually establish something, or are we just moving back and forth within the range and this coiling, and not yet is our answer? So we'll have to wait and see, but you should be watching these key inflection points and these key breakout areas. And it is an area. Don't look and don't get hung up on a particular penny price. But if we clearly break out of this area, then that could be a very significant opening for the next swing. Our portfolio investor posture, IBD status, is uptrend under pressure, so that is absolutely a warning sign, while the GMI index is at a 6 out of 6, so perfect there. Active trader market posture remains bullish coming into today. From a position sizing opinion, we retain the same opinions that we've had in recent days. From an investor standpoint, up to 50%. From a volatility standpoint, up to 100%. Market timing a little different today. Our one-day outlook is neutral. Normally, we would expect to be neutral with a slight bullish bias with OPEX day. Obviously, with the kind of open that we have today, just to get back to even for the day will be a pretty significant rebound. So we'll have to see where this energy takes us at the cash open. 3-day outlook is neutral. Oftentimes the Monday after OPEX has its kind of own characteristics. 2-week forecast is slightly bearish, especially if we don't get that breakout. From a market posture, you can see all 4 of the broad market indices are bullish, and actually the Russell's very bullish, and the S&P coming into today, as is the NASDAQ, we're on the verge of going into the very bullish zone. So this actually, from a posture standpoint, was very strong coming into today, and would call for the initiation of new short-term and intermediate-term bullish trades. Hedge warning status does remain elevated, though, and is a reflection of the fact that our IBD status is uptrend, under pressure, and that's a serious metric there. But also a number of other things play into this. In fact, our daily squeeze that is present on the VIX, the number of distribution days, though this is just about to fall off. If we were to fall to 4 and 4, this would no longer be a concern. Now, right now, it kind of looks like we might actually add to this count today, but we'll see where today takes us as through the close. New highs, new lows were actually quite favorable yesterday. 337 new highs versus only 167 new lows. But other warning areas come from the fact that we still have this crash warning signal on our E-mini charts. And from our intermarket risk aversion indicators, we still have a couple risk off indications. So a lot of mixed signals here, and that's why we end up with this hedge risk level of a 1. Option income strategies, cover call strategies, and put selling opinions, all the same as yesterday. VIX is inside the acceptable window, but you got the daily squeeze, so consider that. Certainly in this kind of a market environment, a neutral stance with a 2-to-1 distribution between in the money and out of the money strikes would be very much called for. Put selling, look for the opportunities to sell puts against the core portfolio basket of stocks that you're willing to own, and the position size that you're willing to own would still be a call. You might want to wait and see that you see something of a bottoming pattern form. Obviously, you have to be able to sell puts when it looks awful. That's when you get the premium that you're looking for, the opportunity presentation, and yet at the same time, there are signs to look for as to whether this is a continuing momentum to the downside, and you need to stand aside and be patient for your entry until a bottoming pattern forms, and that may be very much the case today. I know I've got several myself put selling opportunities on my watch list that I'm looking for, but I will seek to see some evidence that the bottom for the day at least is in place before initiating those positions. From a sector market posture, generally in pretty good shape. Transportation is not looking good. That certainly is a warning sign. Utilities, of course, the darling of 2014 has been the dog of 2015. Retail was also certainly the darling of the Q1 period and has fallen off pretty significantly. So these are the kinds of things to look for in terms of understanding when sectors come in and out of favor. And do your own research into those charts. We don't have time here, but certainly, is retail, is this an opportunity to re-enter in a longer term bullish trend, or is this a reversal of favor and is moving into more of a bearish intermediate term trend? You need to take a look at those things, but these kinds of analyses can help you understand when you might need to be making a deeper study into those charts. Transportation should be a focus for you. Utilities, retail, energy should all be a focus. Energy, for example, it wasn't long ago that energy was the absolute dog. And if you look, depending on what your time frame is, if you look at energy in recent days to weeks, energy's actually gone from last to first in terms of some strength indicators. So at some point, these situations can resolve and reverse, and there's a lot of money to be made, especially for those of you who are value players, and being able to start picking up some of those positions at those bottoms as they roll over. Perhaps you need to scale in, perhaps sell some puts to begin with, or some credit spreads, something that's relatively conservative to where you just have to be not too wrong in order to make money, versus a highly directional delta necessary position where perhaps like buying a stock and you have to get it right, you have to go and move in order to make money. So energy certainly has been a great example of that. What are we seeing in retail? What are we seeing in utilities? What are we seeing in transportation? Those are questions that a deeper dive into those charts might help you with. From yesterday, obviously, consumer staples was the best performer, but really, this is pretty much a go nowhere day. You notice the S&P, essentially it was a doji yesterday, and really no change. And other than utilities down over 0.5%, really nothing else got going in any kind of significant way. On an individual industry group level, from our shadow trader charts, retail, internet, healthcare, railroads, biotech remain the top 5 industry groups of interest. So, as always, if you are appreciating what you're getting here, we appreciate you investing back in us and sharing what you have found here with your trader friends, as well as liking us on YouTube. That's the simplest, easiest way to show your appreciation, and we do take a look at that every day. We greatly appreciate your feedback, whether it be through emails or input into the website, and you see the address there. Disclaimers, as always, hit the pause button if you need a few more moments to review the disclaimers. And we'll see you back here on Monday morning in our market preview from the Falcon Global Traders. Thank you.